We'll face quiet, holiday shortened week, everybody. See what we could do in 3 days. Pull out some equity out of the market. Hello, Alexander. Ryan, how are you, buddy?
Morning, Dale. Good weekend?
Yeah, nice weekend. They go fast.
Yeah,
pretty quiet over there. Not much movement in FX.
yeah, very good.
Kind of thinking we're going to have some type of short-term high and a pullback in the dollar back towards these levels. So I haven't done anything yet because if you notice, Ryan, this high here, we didn't take it out here. Same high on my platform and same high over here. So maybe tomorrow, maybe today, just see what happens when they take out these highs, see if it's just a liquidity event for people. But starting to get overdone. I'm waiting on the potential of a 3 drive here in Euro. I think we could have bear market rallies back to, 114.5 or so, 115.
Yeah.
So just waiting for, maybe one more shoe to drop here. And that's mainly my thoughts. Maybe Canada looks like it's getting a little heavy here too. Looks like it's topping. And maybe part of it is that we're going to get some type of bear market rally in crude. There was a nice little 3 drive here last night on the 15-minute. Everyone see this? Hi, Monica. The 1, the 2, the 3. So it worked, for 160 pips. All you have to do is wait for these. If you know one trick, maybe you just, do that one magic trick. And they don't always work, but that worked. Because I think there's a shot that this part of the break is over and that maybe we get a rally back towards 80 and then finish it off with, this was about a $10 break. So if we rally to 80, near 80, and then we have equality one more time, would take it back down towards 70 and, kind of towards these speed lines that intersect down here. So that's about it. These are pretty, choppy days from my memory. I've seen a lot of, big moves happen on these days before Thanksgiving. Haven't you, Ryan, where, everyone's complacent and nothing's going to happen and there's just not as much liquidity and markets could be pushed around pretty good.
Yeah, and also when the US is on holiday as well, it's the liquidity drops and suddenly those little headlines that don't make much move normally suddenly spring you for 30, 40, 50 pips. So, definitely time to keep your eyes peeled, as they say.
I'm keeping an eye on, since you drew my attention to it, I'm keeping my eye on the yuan. So, I still, think
still
that this is still think that this is a possibility down here. I don't know what the price is, 632, 631 down here. I mean, there's no way if, it's not that far away.
No.
And, look at the RSI reading at the first drive. I mean, under 30 at 21. And then usually when you have that kind of downside momentum in the RSI, your second drive sometimes doesn't hold above 30. And this one, 28.75. But if we get one more shot down, I'm pretty sure it's going to stay above 30. So I'm eyeballing that. And Ryan, you think the reason for looking for a low and the USD yuan is because you're looking for some risk off? Is that the reason?
Well, obviously I'm long dollar, so I'm looking at dollar China, so I'm looking for it to rally. But the fact it isn't is becoming a concern. We've seen this sideways action as you're pointing out. We keep nicking smaller lows. The problem we got with this currency, or rather CNY, which is the main one, is obviously that the PBOC have got their finger firmly on the pulse So you never know what they're doing to control it, and CNH will follow as it tends to do. So yeah, I mean, I'm comfortable with the position. I'm happy to load it a little bit lower. Already did that. Was it last week or the week before? When we got down to 636 something, mid 636s. But I'm going to be quick to offload it if I see prints above 640, just to cut out and put some in the bank. And it's not going up, but it's not really going down.
Yeah.
So,
but these highs up here were the COVID, right? And then once risk stabilized, you had this, right? And you still have this. So it would probably be a risk-off event that could trigger it, right? Take it back up to here.
Yeah, potentially. Or further thawing of the politics that China's playing. Remember they're trying to keep prices down in China. They're fighting inflation like anywhere else, and one of the ways to do it is through the currency. So they're playing
a strong currency. Yeah.
So they're playing that card as well. So if things ease on the price side, inflation side, then that's a potential catalyst to see this pair rising. But then again, on the other side, they fight the political stuff, and they don't want that stronger a dollar either. So it's 6 of one, half a dozen the other. As always, it's a time cost. But we can only, like you say, we can only play the levels. That's all we've got to rely on. And until I see a confirmed break above sort of 640, 641 that holds, then the downside is still well in play, as you say, and a drive down to those lows.
Okay. Good morning, Stel. Are you with us today?
Good morning. I was just typing on the chat room. There's a lot of chatter about the Fed governor being announced today. Sources, the usual sources, but wouldn't trust it 100%. That's what I wrote. But when there's smoke, there's fire, and I think there's a good chance we might get that. I really don't know. Blake said if they don't announce something by the weekend, then Brainerd is probably the most likely result. I actually don't know. I really don't.
Who knows?
And really,
Biden does it. Biden doesn't even know.
His own name.
There's a lot of things he doesn't know apparently. But that's.
Oops! We broke a rule about politics. But I'm an equal opportunity political commentator, because I come down on all of them. Right?
Exactly.
That's good. But this week, this is going to be the main news. Like you said, the week is Thursday, Friday is a US holiday, so it's going to be a theoretically slow week. But this is the main event, and we're waiting to see that. Not that it's going to make a huge difference in the long run. In the long run, I mean, after the first few days, I think pretty much all governors now are the same. Even if they bring, like Steve said, even if they bring Neil Kashkari, who's the biggest dove in the planet, I don't think anything is going to change really. So we wait for that. And I think the question now, I had a couple of friends asking me, what do you think about currencies, the dollar and strengthening? And I said, look, because they were saying there's going to be divergence now between the ECB and the Fed. And surely now that the Fed is going to start hiking, the dollar should do well. And I said, look, it's not about what they do. It's when the market prices what they're going to do. And the market's now priced it completely. I actually said to them, look, I think that the risk is now for the dollar to go the other way. Of course, it could rally a bit more. I mean, obviously, nobody knows. But I think now that we've priced a complete taper by mid next year and starting to hike rates by sometime late next year, I think it's a tall order to actually match these expectations. Of course they could, and they could even do more. But my humble view is, I think we've priced a lot of stuff now, and nothing from the euro side. So I think now things are shifting a little bit, and I would be worried, being long dollar like Blake has been, and I mean, it's been a great call, but now given what's priced in, I think now it's getting a bit more tricky.
Yeah, I agree still, because I've been obviously long dollar yen since September 2020.
Yes, I mean, that's good. That was good.
I think we're we're still arguing over the exact timing and by how much. That's still the play. So you get good data and suddenly rate hikes come forward and there might be more. You get data and it gets shifted out. It's all that minute shifting around the calendar and the pricing rather than big, huge moves on what they're expected. So I think once it becomes clear when the Fed are going to start hiking and potentially by how much, if we get a last minute rally or a late rally on the dollar, that's when I'm potentially going to be looking to cut out my position. Because like you say, once you've fully priced in the expectations, you've got to look elsewhere. And I think the euro could continue to suffer because, the virus cases in Europe and the lockdowns coming and, all these issues, it's going to push the ECB further away from tightening their policy.
Any other countries locking down in Europe besides Austria?
Yeah, Austria, Germany are talking about it now. They said they weren't, but now they're bringing in mandatory vaccines and, they could lock down and, obviously got Netherlands locking down.
Is it the Delta variant still, or is there a new one?
I think it's.
We've run out of letters now, I think.
Yeah.
No, I mean, they could come up with another name.
I have no idea.
What's the next Greek?
It's the Stelius variant.
Epsilon. After Delta, it's Epsilon. No, Gamma's before Delta.
Alpha.
Yeah, the Stelius variant. I'm getting my third shot in a couple of weeks. So
I
anyway, good.
Yeah.
I mean, who knows? And it depends on the country. Some countries are very aggressive on how they take measures against COVID. Some are not. What's right, what's wrong? I have no clue. I really don't.
No one does.
But the main thing is that the European countries tend to be more draconian, let's say. So that's not going to be, that's going to have a toll on the economy. The European economies, and the market doesn't like that, and it makes sense.
Do you think there's a chance that they might even not stop the PEP? Because that's the expected thing, that they stop the PEP in March and roll it into QE. Do you think they might not stop it, or they'll roll the whole lot?
Well, between now and March, we have 4 months, and if we do see things getting worse, and especially if data starts turning worse, I think that's a really it's a probable scenario. It's not something we should eliminate. No, far from it.
Hey, Ziggy's making a great point. Do you have a chart of it? I've seen lots of charts. There's no lending going on.
Put
M2V on trading, you will see it. It's all-time lows, velocity of money, all-time lows.
So that's you would think the Fed would be afraid of that. They don't care.
Well, it's been on a downward trend since the 60s.
Oh, okay.
It's actually, I don't know what the Fed think of that.
I don't know.
But velocity.
Bears pull that out all the time. The velocity of money that despite rates being cheap, the banks don't want to lend. There's all of that. I don't know.
I think the biggest link to velocity of money is inflation, because as money gets turned over, more and more, then you get inflation. And
Stelius, I was just going to mention, and I'm sorry to interrupt, but
you're taking a day off.
Hey, I know. I was going to say that the money supply is an argument that a lot of analysts would say is the reason why there's not a lot of inflation, and because of that, and that's going to be the argument that that inflation that we're seeing right now is not real and sustainable, right? Is because the money supply is shrinking. But I mean, I've heard that. I haven't seen any data to back it up. I've heard it from a couple of economists. So what do you say about that?
I've been saying this on this webinar for quite a few times. I think QE is actually deflationary, and the reason why that is because you have QE is what? They're buying bonds, basically, right? And in some countries like Japan, they're buying equity ETFs. So basically, they're buying assets which are owned by a small majority, a small fraction, sorry, of the population. So they're buying all these bonds and corporate bonds and government bonds and equities and whatever, and all these assets are going higher. Now, the majority of people don't actually have even $500 on the side, right? In the States and in other countries, so they don't own these. So what does this do? All this asset buying, basically, it's causing asset price inflation in pretty much everything you see, housing and the land and the, cars and art and everything. So the top 1%, the stuff they own, gets more expensive, and that drags everything higher, rent and house prices. So what's the end result? The end result is that the disposable income of the average person is reduced, because they're paying more for rent, they're paying more for medical, food, more for education, more for food, more for everything. So the more the central banks are buying this stuff, which actually only the top percentage of the population own, the worse it is for the average person. And either they get it and they do it on purpose, or they don't get it. I can't understand either of these scenarios, but one of them must be true. So... Yeah, well, rant over. Sorry.
Yeah, no. I mean, it's fine. I just I don't understand. I just don't understand how it could be deflationary. I mean,
well, people have less to spend. So on the regular items, the regular things that people buy, there's less demand, right? They have less money to spend. The other stuff, which is stuff that doesn't go into CPI, like housing and stuff, that's going through the roof, right? Yeah. Look at the housing 30 years ago or 20 years ago. Look at it now. Or education or healthcare. We talked about this over and over again. So for the average person, I think it's deflationary, which is anyway. Yeah, I could be wrong, but we're seeing QE, so much QE for so long, and look, it took this supply chain disruption for inflation to actually come up. Before that, it was 1.5% and never got to the target.
Yeah.
Anyway.
Well, it's I'm not. How did you guys get stuck on this conversation anyway? That I jumped in on.
It's Ziggy's fault. Yeah. Go away, Ziggy.
All right. I was wondering
Ziggy what brought it up.
Just okay. Well, thanks, Ziggy. Appreciate that. I figure I'd probably take us through some charts just to see that absolutely nothing's going on this morning. This is one of those mornings that when I got in front of my screen, usually, so what happens is, I get in front of the screens and I go through the chat or the charts, and I update a bunch of charts. So you can go over to where it says update timeline updates. You can see there's like nothing. I mean, there's no updates from like hours ago. And that's because I got in front of the charts and I looked at nothing happening. I mean, really nothing. It's, I could sit here and say, oh, look, everything's wedging. I mean, but really it is. I mean, you look at the euro, and this is what the price action is on this is an hourly chart. So here's a 4-hour chart of what the euro is doing. And by the way, the euro is at its lows. James was just in the chat room asking about, do you think the dollar might weaken just in case, what's her name is announced, Brainerd is announced as Fed chair, because there's all this, you were just talking about it, Stelios, that there's a leak out there that some that Powell's going to be nominated today. And look, I don't see why Powell won't get the nod. I guess there's a Washington Post article this weekend, over the weekend, how Powell was getting the some very, very nice comments from President Biden, I guess, over the weekend. So people are starting to make that assumption that, it is going to be Powell, it's going to be nominated. But other people speculate that he is talking about the economy tomorrow night, and that means that Tuesday night we're going to get our announcement. That would be a perfect time for him to do so. I mean, I just know that the market's not going to do anything until we figure this out. I think it's going to be really quiet. Well, at least today. Tomorrow we have some data coming out, which would be, potentially could move the market. But today it's like, I think we're all waiting to see if we hear something. And if not, I think the markets are going to be kind of quiet. Stocks are still struggling around the 47.22, resistance, that's the 161% extension. If you guys, haven't seen it from this is the September highs to September lows. We're just kind of struggling up there, but notice how, again, I want to say everything's wedging. We have this bull flag pattern. It hasn't played out. So now it's, I'm more, anticipating a wedge type of move here. So you can see that the S&P is stuck. We just looked at the euro. The euro's near its lows. You take the Aussie. The Aussie has completed that bear flag pattern. Most people knew that bear flag pattern channel support, right? This is you can probably draw that a little different. You can do however you want to do it. It's just we held the lows. That's all I'm looking at. The Aussie is holding channel support. Kiwi, same thing. You can see the wedge developing here. I guess let's go into an hourly chart. You can see the wedge really, really tightening here. Dollar Canadian, we're up against a 618 retracement. Look, if you guys are bearish dollars and you just want to be, short dollars, the loonie is probably the best setup right now. But I've watched so many traders get run over trying to be short the dollar Canadian. I mean, I haven't been playing it to the short side, meaning I have not been playing Canadian on the long side here, but I've seen a lot of traders get just destroyed trying to be long the Canadian dollar as we had this rounded bottom situation in the dollar CAD. And fortunately, there was none of our traders in the chat room. Most people were not trading it on the short side through here, but I saw a lot of people on FinTwit really get destroyed here. But we are up against a 618. So, I mean, logically, if you want to take a shot, you have a good risk reward just to be on the short side here, as long as we don't get above, let's call it like 126.80. That's not something that I feel like doing. I don't have any desire to take that trade. But it is a wedge. And since it is a wedge, if you guys want to be on the short side of this, just let it break through the support. I think if it breaks through the support, then you got a, really good risk reward. And these are the types of things that, by the way, these are the types of things we talk about in the, morning edge. We talk about during the daily roundup. We really start discussing, hey, if you shorted here, here's your risk above here and your reward is down here. That's a decent risk reward ratio. If you look at it from a dollar amount perspective, you go, okay, well, I'm going to enter, let's say 126. Let's just call it 126.10. Stop loss is at 126.90, and your target is what is that, 25 roughly? Let's call it 125. And let's say your position size is 100,000. I mean, you're risking 600 to make, 872. Your risk reward's 1 to 1.37. Is that a good risk reward? Is that something that you're willing to do? Okay, well, I'm not really willing to take that trade, but if I get into a short here at 19, then my risk reward's a little bit better at 1.61, 1.6 to 1. So just working through the numbers is really important when you're trading, especially when you have, relatively, tight risk rewards. But, that's why it's so important to understand. You're like, well, I'm not really willing to do that. But if we stay here in the 50s, I can short 1/2 position, and then my risk is smaller. And then you get below the support, you double up your position, then you move your stop lower towards your original, entry price, then your risk reward becomes a little bit better. So those are types of things that, like I said, we talk about a lot of this stuff on the private webinars that we do in the ForexAnalytix communities. But anyway, just some food for thought for those of you that want to be short dollars. Ryan, what do you have going on today? I mean, is there anything that you are particularly looking at, especially this week, being it's a Thanksgiving weekend or week, excuse me. By the way, I love this weekend. I love this weekend and moving into the next, month. I love the holidays. I love putting up Christmas lights. I've got to, grab ladders and do all that this week. It was the fun part of my holidays, but I love spending time with the, I always love spending time with family. So it's really nice that we've got, a lot of us that are going to be together this week. So I'm super excited about it. But I know in the UK, you guys don't celebrate, the American Thanksgiving. So what do you guys do over there in Europe while we're all enjoying?
Well, America, the only country that has two Christmases, practice one and the real one. So, any excuse to eat turkey over there, I guess. And then we have to suffer the lack of liquidity. So thank you very much, America. But yeah.
Do you guys do you guys just drink a lot of beer while we're out celebrating?
Yeah, we usually go down the pub because obviously we used to go down the pub when I worked in the city. Thanksgiving markets would die, so we'll be in the pub from 11 o'clock, and maybe we'll go back to the floor 5 to 4, see out the close, and go back down the pub again. So yeah, we celebrate in spirit with you guys. Any excuse for us now over here. But yeah, I don't know. There's not a lot going on today, but tomorrow we kick off the PMIs, the next round of PMIs in Europe. So that'll give us another look at what's going on in the price surveys. Obviously, we get those from the US as well. So we'll get an idea, as I say, what's going on, and we might hopefully get some moves on those if we get some good numbers. We've got a big expiry in euro dollar on Wednesday. It's currently over 4 billion at 1.15, which is a bit of a way away. But we were talking earlier about the lack of liquidity, and if you're going to have something funny going on in a price around the options, it's going to happen when there's lower liquidity. So that's something to keep an eye on for Wednesday.
Wait, what was the dollar amount?
4 billion, over 4 billion.
At 114?
115.
115?
Yeah.
Shoot, I'm going to get long the euro right now. Why not?
Good luck with that.
It's a bit far to be a magnet, but it could be.
Yeah.
Hey, you never know, Stel. I do remember, I remember in 2000, I forget exactly what year, but it was around, because I remember exactly what I was doing and what kitchen I was in. It had to have been 2005 or 2006. I was carving up a turkey, and I was in my kitchen back in Dallas. We had this one kitchen that it was we were on the golf course, so it was but it was one of those, it was all windows. Our whole kitchen was big room, all windows. And I remember I was cutting up the turkey, and I had my laptop, because we didn't have, our phones didn't have quotes right there. So I had my laptop, next to me as I was carving up the turkey, and we had there was 150 pip breakout in the euro dollar. I'd have to go back and see. It was probably somewhere around here, and venture to guess April. It was right. Let's see, 2000 November, right here. I guess it was right here. It was something like this. Yeah, and it was it's some really big moves. Let me make sure that wasn't it. December, November. Maybe it was right here, because I think we had these really tight trading ranges, and then all of a sudden, it was 150 pip move, as I was carving the turkey. And then, and it must have been this move right here, because we got slammed back, I believe, right after that. But that was one of those very illiquid. Ryan probably was at the pub and came back from the pub, and somebody fat fingered it because they were really drunk. And it was a big one. Somewhere around here, 2009. It would have been somewhere 2009, maybe, or what? I guess it was 2005. Somewhere around here. This is anyway. Sometimes some really big. Oh no, this is it. This is it. Because it broke all that resistance. You guys see that?
Yeah,
that was it. That was the move. That was a big one right here. And I'm not even exaggerating. It happened as I was like cutting the turkey. So anyway, fun stuff when you guys.
Financial crisis. Yeah.
What's that?
It was a year or so before the financial
Yeah,
crisis.
and I remember there was another one. There's another one that maybe it was this one over here. It was like the night before. I was at the bar on a Wednesday night, and it broke out. You know, like we saw some really nasty moves like Wednesday night. You know, before Thanksgiving. So don't sit around thinking that it's going to be super quiet and things don't move. They can, and they can move pretty aggressively. I don't think we're in that market right now, but it has happened. So anyway, and I'm just going to blame Ryan. If anything happens, I'm going to blame Ryan.
Yeah,
I
me
think
too.
it's a good shot.
I'll blame Steve. So we'll pass it along.
Okay, as long as we can point fingers at everybody else, that'd be great.
Yeah.
Anyway, well, guys, it has been really quiet, but just remember a couple things. I know, Dale, you got an interview to do. I just want to say that the Fed chair is a big deal, and it's something that I mentioned on the week ahead video. Whenever the Fed chair is announced, especially in a week like this week, a lot of position squaring and a lot of positioning will be done as a result of whoever is announced. So, if there's people saying, well, I think it's going to be Powell, and Powell gets, the position, you'll see people piling back into the market, however that looks, based on that, decision. And if Brainerd is selected as the Fed chair, there's going to be a lot of positioning adjusting going on for the next couple of days. So whatever move that you see following an announcement, be careful fading it, I guess is the point I'm trying to make, because there could be some follow-up to that in a very illiquid market, especially with that change. If Brainerd takes the Fed chair position, whatever you see, it's probably going to play out for a couple of days. I guess that's the point I'm trying to make, and this is the point I made on the week ahead video. Just be really careful.
I'll be worried about the following Monday when US markets are open fully, that they don't really trade it then.
Yeah, and just remember that this is a weird time. Most of us, we expected a Fed chair announcement a month ago. Yeah. I mean, I think Biden forgot about it.
Yeah,
I'm joking.
Forgets a lot of things. Yeah.
Yeah, but we were expecting that like literally a month ago, and here we are on Thanksgiving week, and now we have to deal with this on a very illiquid week. So just whatever happens, I know a lot of you are traders. So as a trader, something happens in the market, you see a big 100 pip move, and your first inclination is I'm going to fade it. But you got to be really careful doing that this week. All right, I just got to throw that out there. All right. Anyway, appreciate all you guys being here. Dale, I don't want to take up your guests any more of their time.
I nominate Kathy Donnelly for Fed chairman.
Oh, well, there you go.
Kathy,
all right. Kathy, you're in.
Kathy, I nominate you to in front of Laurel Brainerd.
I'm good where I'm at, but thank you. I appreciate
it. Great answer. How are you, Kathy?
I'm great.
Welcome back.
Thank you. I feel like it's been a long time.
Yeah, probably has been 3-4 months, and I know that this isn't exactly your favorite time of year because you're already looking ahead to 2022 for what would be the new IPOs and what's going to happen next year. But anything really on your radar screen? I think we had that, EV Rivian. Was that a new IPO that has to go through your whole process of the IPO and then the discovery phase and the, where you're really, checking out to see what kind of volume and you're doing due diligence on it. Was that one of them? I think the name of the stock is Rivian. Everyone's buying because Tesla is too expensive, and they're giving it value. They're giving it valuations comparable to Tesla.
Yeah, well, it's funny that you bring that up because well, it's funny that you bring up a lot of things, and you're touching on all our key points. So good job, Dale.
Oh,
I'm glad
okay.
that what I say resonates. But I actually have a lot of great information to share today because, yeah, you're right. I've been waiting. It's kind of been a patience game for me. And now I'm seeing all these great setups that I want to share with everyone today.
Oh,
But
beautiful.
let's quickly look at Rivian. This is a weekly chart, Market Smith here. And yeah, this is that volatile IPO advance phase. So, big
Okay.
bar up, reversal.
We're still seeing your cover slide, trading life cycle.
Oh, I'm
So
sorry.
you may have to stop sharing and reshare to show that chart. It's possible.
There we go. There we go. Now you can see it.
Yeah, got it.
Yes.
Two candles.
Yes, and
Okay.
volatile, right? So
Yeah.
and people, you're a good swing trader. These are great for you. For me, as I've expressed to you, I like to wait for that due diligence phase to pass, as
Right.
you mentioned, and then look for that first mature base, which is what I'd like to focus on today.
Okay.
So
Show
I'll
some.
bring my presentation back up.
Okay.
And of course the disclaimer, everybody knows. And just a quick review, just really fast, the life cycle trade. You've already mentioned it, looking at the IPO, where is it in its run? Is it in the due diligence? Is it in that volatile IPO advance phase? Where is it at, so we can apply the appropriate trading rules, risk management, etc. And I'm not going to spend a lot of time on this, but I just wanted to highlight the IPO advance phase, what we just talked about for Rivian, and now this due diligence phase. This is what we've been watching, Dale. All year I keep telling you, we're watching. You're like, golly, how long is Kathy going to watch? Well, Kathy's not watching anymore.
Okay.
I'm taking some action.
The waiting's the hardest part, isn't it, Kathy?
The waiting's the hardest part.
It really is, and that's part of your process. Does it ever get any easier?
Well, as I guess in traders, investors, we always want to take action, right? Because we get excited when we make a purchase and it goes up. But, there's something to be said for, I'm just going to take it easy, and I'm still connected to the market. I'm still watching it, but I don't have to always act on every little, bar and move, right? Because you want to.
We're paid to wait.
We're paid to wait, and we're paid to wait for our edge and what works for us. And what I share with you and your listeners is, what works for me. And, if you have similar, characteristics and the personality that I have, then, I hope this helps you,
Okay. All right.
Okay.
It's not easy. Well, what I'm saying, it's not easy to have the kind of discipline that you need to have to do this type of investing. You really you need the patience of Job sometimes.
Yes, exactly. Okay. Now I'm highlighting this phase really fast. This is the late bloomer phase, because this is a very common phase. And this is what I'm going to show next, and just the pump and dump. But here's the thing, Dale. We have had so many IPOs this year. Look at this, 843.
Wow.
I mean, it's just crazy. Yeah, and of course, more than half were SPACs. So there's so many to pick from. Yeah, exactly.
Because it was so easy to get that registered compared to an IPO.
It was so easy. And those SPACs were very volatile. I stayed out of most of them because, again, I'm not that swing trader. And so for me, there were so many out there, but I had to wait. I was waiting for me, that waiting game. And also the liquidity.
How's that Trump SPAC look?
Oh my gosh, isn't that wild?
Oh, I don't know, but a friend of mine told me his buddy bought that SPAC on the first day of trading and had like 200% in the first day and got out.
Oh wow, we'll see. There you go.
Did that happen?
He knows how to trade. Be a
he
position.
Doesn't. He's a chef. That's what's bothering me about this market is that, chefs and shoe shine boys are making money, doubling their money, buying the opening and selling it before the day is out. It's Shouldn't be that. It should be illegal.
Well, I mean, if they're
Shouldn't be
in and
that
out,
easy.
if they're in and out and they know what they're doing and they're being
Yeah.
safe and know that that's not the norm, then I'm okay with it. But
Yeah.
soon as
Most don't know
people,
what they're doing, Kathy.
if they think this is how they can make money every day for the rest of your life, then that's where
Yeah.
I would be concerned.
Yeah. Yeah. Right.
But yeah,
Okay.
see, here it is, big run up. And
Yeah.
now, it's starting to go down. So it's probably going to go sideways for a while, just like, we see most IPOs and SPACs do.
Wow. So I see it. That's one day where it went from what, like 26 to 130?
Yes, exactly.
Huh?
Exactly.
Oh
Yeah.
my God.
Let me see how high I think it went higher than that. Let's see, 175.
Oh my God.
175. Yeah,
Nice day trade.
exactly.
Yeah.
And
Okay.
the other thing to point out, Dale, is that a lot of these aren't even liquid enough. So you take that 843 and really 28% of those are probably liquid enough to trade. And when I say liquid, we found out in our research $20 million a day is the bare minimum. But really you want $100 million a day or more, right? Because these institutions, you want them to be able to get in and drive the price higher, and they can't do that if it's not liquid enough.
Yeah. What are the spreads like? And it does the dollar amount also tighten up the bid offer on the instrument by meeting your requirements? Is the bid offer tighter? And the more illiquid ones, you either have to make an appointment to do the trade, and the bid offer could be 10, 15%.
Right, and you
right?
could put the order in and it might not even go because there's just no one there to buy it or sell it, etc. And then that's how you get trapped, and it can be very dangerous.
Okay.
So, and the reason why this is important is that because what we saw in the research also is that of this 28% that are liquid enough, those are the ones that give you the better odds of making 100% or more. 75% gain 100% or more.
Volume precedes price.
Yeah, right. And so this is just a quick table just to show what the numbers are. And you can see for 2021, it's actually a little bit lower. The year's not over, but we had so many, and that just tells you how many of them were illiquid.
A lot of junk out there.
Yeah, exactly. Okay, so let's get on it. So this is that institutional advance phase that I wanted to tell you about, and waiting that maybe 6 months, sometimes even longer. And I feel like this year, well, we're in November, so I've been waiting most of this year, looking for these first base consolidations and powering through this turbulence zone, which I'm going to show you in just a second. So let's just get on it. I mean, here's Snowflake, Dale, and I know we've talked about this one many times. But here was that IPO advance phase. Here's that due diligence phase where it went sideways. And here I'm highlighting this previous high when it first came out as the turbulence. And now here we go. We've got snow. It's approaching. We're looking for a first mature base. Now I have to disclose, I own this stock and I was buying it early, actually as it was coming up and holding the 10-week line and holding the 40-week line.
Nice.
I would have preferred to have a base, but I don't officially get one yet. I probably will get one soon. So this could be one to watch, Dale, that's transitioning.
Okay. So after this move, we get some type of consolidation formation, maybe sideways, or maybe a retrace, 50% pullback, and then it starts building a new base for a different launch point above maybe next time the historic highs.
Yeah, exactly. So this right here, prior high, is potentially going to cause that turbulence, potentially cause that retracement, like you talked about, a base of some sort. And for sure, this looks like, I mean, we don't know for sure, right, ever, but we're transitioning into that longer advance that could last a year or two or more. And, still working on earnings here, but we've got sales. And so this is, I think, a good watch list candidate for folks.
Okay.
And then, as I mentioned, I own some, so I have to disclose that.
Okay. And what's the symbol on Snowflake again?
SNOW.
Okay. Thanks.
Yes.
Okay.
Yeah.
So nice one going into year end. I hear that, even if you didn't trade well this year, that because of the energy crisis we have going on right now, Kathy, that Santa can't afford coal to put in people's stockings. So this is definitely Santa would not have put a piece of coal in for this trade. So nice
Right.
work.
Right.
Nice work.
Okay, so now let's look at this is just, I'm going to show some more, but I just wanted to highlight, you know, here's some that people can take a snapshot of that, you know, I'm watching. And here we're highlighting, you know, in greens, these really big, you know, $1 billion traded, daily average dollars traded, you know, Upstart, which has already had a crazy move, you know, Affirm, which had a good strong move and now maybe consolidating. Snowflake, I mentioned. Airbnb also looks like it's approaching, and I've got a chart of that one as well. Roblox and Coin. And so you see these have strong revenue growth. And here I'm already showing, you know, the percent from the first daily close. You know, Upstart, of course, I already mentioned. But a lot of them are up from their first day close, which is another bullet point that we like to focus on as it regains and starts to move up.
Okay. Would you say that with it being higher above the first day, a bigger percentage or a lower percentage, or that really doesn't make a difference as far as your process for buying the stock? Say, like you look at Coinbase, I mean, it's almost back at where it went public. Does that make it more of a value than something that was and attract you other to something that's up like over 100%?
Yeah, well, when I looked at one, if the example of Coinbase, you know, I say, oh, okay, it's getting back to its day one close. So again, it's getting back up to where it was. So to me, that's encouragement, right? That, okay, institutions have done their due diligence and they're saying, yeah, I think Coinbase might be one I want to invest in. So they're bringing the price back up. And now we can start looking for that mature base in that due diligence phase to then start our own positions as we hope that it transitions into that advanced phase. And I have a chart of Coin. So let's just move on, and then I will show you that one in a second. I have Roblox next, though, here.
Okay.
At least, actually, do I have a chart of Coin? No, I don't. Actually, I might not have Coin, but you know what? I want to pull it up for you because I think it's a great example. So we were on, all right, you can see my chart, right?
Yeah, got it. Coin's up.
Great. So here we had that decline, okay?
Yeah.
So that was an advanced failure. Here's our due diligence phase. And then, yeah, see, here was the day one. Well, this is a weekly chart. So this is the week one close. And so it makes sense that there's some resistance here, just as there will likely be resistance at this prior high. But now already, we're only about 2 weeks in here, looks like 2-3 weeks. But it's forming some type of base. So this could be its first mature base within this institutional advanced base that, you know, if institutions continue to show accumulation as they've shown in this prior run-up of, what is this, like 8 or 6, you know, blue bars, then this is going to be a great potential entry point. And then you might still see some turbulence here, and then, you know, we'll see. Maybe have a good run for a year or two. So, yeah.
Because I'll bring it up to you and tell me what you think. I really was kind of, you know, I find it fascinating watching an NFL game that now there are commercials by some crypto broker or some crypto with Tom Brady on his phone trading Bitcoin, showing the screen.
Wow.
I mean, that's how, yeah, those commercials are out there, and a lot of advertising by crypto brokers, or you know, where people could trade it, and they even got Tom Brady. You know, they were talking about, it's a trade. No, this is not a trade. This is I'm trading crypto. So they used that trade like he was going to be traded, but showed him trading Bitcoin on his phone.
Wow.
I
wonder how much crypto. I wonder how much crypto they gave him to do that.
Yeah, like Tom Brady needs to trade.
I know. Yeah,
right?
exactly.
Huh? Do you think Tom needs?
Yeah, I would think he'd be okay.
You think he has like a PIP goal by the end of the week to cover his overhead and everything, like John Q. Public like us?
Right,
I don't think so.
right.
So anyway,
Well, let me disclose that I do have a coin, by the way.
you have coin too?
I
Okay.
do. I've already started nibbling as it got over this prior high, and likely,
Yeah.
if it builds the base that I'm speaking of and continues to run up, then I'll look to add more. So I want to share that with everyone.
Well, you've got a bag full of goodies going into the holidays this year.
Yeah, I
last
do.
year you didn't have much. You were waiting.
Exactly. So see how things have changed, right?
Yeah. Yeah.
All right. Can you see my PowerPoint again? Let me just make sure.
No, we're still on.
We're still on. Okay, let me try this again.
Roblox.
Okay, you see Roblox?
Yeah.
Okay, perfect. So this is also a recent chart. This was as of the close Friday. This is a recent chart. I've got the IPO advanced phase, as I pointed out. This is that late bloomer example I showed at the beginning. And here you can see it powered through last week. And we've got two big bars, and now it's past that turbulence zone. So this is the one, I would say with this one, since we're already past that turbulence zone, we're already past that prior high from the initial run when it first came out as an IPO, that we're in the institutional advanced phase. So now the question is, will it continue to run like we've seen for a year or two or more? Now, obviously, Roblox, if you're familiar with it, with the gaming and the metaverse, I think, and all those things, I think it has that potential from that standpoint. Personally, I think it's extended right now, and we need to build some type of consolidation to continue to add to it, unless you're good with, high risk entries, because here, obviously, it could easily pull back.
Would your bull bear line be under that blue bar, under 100, if it negates this phase? Say it negates a candle that we have now and closes back under 100.
Well, 100 is definitely, I would say, obviously it was the prior high approximately, and it's, 100 is psychological level. So I think potentially that could happen. We're about 30% or so from 100. So a 30% retracement, would be that's not a bad base, kind of deep. But if this is strong super growth stock, I would hope that it would consolidate less than that, but we'll have to see. But look at the volume coming in here as it's breaking to new high. Yeah, exactly. So Dale, okay, this is also in my my what did you call it, my bag of goodies, because I did start purchasing it as it was coming.
Stocking.
Yes, exactly. And so I put some money in here as it was building its institutional due diligence phase. Not an ideal first mature base within. This is one that kind of just went sideways, never undercut its IPO base, which is unusual. So that is, which I would say is a sign of strength. And now it's just making new highs. So definitely, I think, one to watch.
What do you think the environment's going to be like for IPOs next year? Do you think that we could keep up at this torrid pace? Will the blend be kind of the same between SPACs and the old way of listing IPOs? So what's your outlook for next year? Is it clouded by maybe tax policy might change? The Fed might change? Is there anything that can give you a look ahead to know what kind of year you're expecting, even though, what we expect sometimes we have to adjust to it? But what are your expectations for next year? Do you have any? And you don't have to have any.
Well, that's good, because I don't like to predict, that's for sure.
Yeah. Okay. All right. So we hope the capital machine keeps pumping out new businesses to trade. That's always the hope. That's always the goal,
and definitely I want to see, new IPOs. I mean, if we just go back to the normal 200 or whatever it was, that average was from that bar chart I saw you before we had
Right.
this last year and this year, that should be plenty, and we've got the ones that were already, as I told you, we're looking back, these are ones that IPO'd either early this year, end of last year, that now are the ones that we can focus on for the long term. And then the ones that come out next year, we're going to keep our eyes on them, but they probably won't be ready till later in the year anyway. So as long as they're coming out and we just keep this rotation going, I think we'll be in a good place.
Okay, Kathy. So I think that I think it's a very interesting style and way to skin a cat and be there for macro moves in the market, which I think a lot of people that I know probably don't have the skills for doing that because we're so short-term oriented. Someone's asking, any view on EV? Boris Johnson is due to announce the requirements for new home built in the UK to have an EV charging point. Will this make a difference, and to which stocks to watch for? So I guess in the UK, Boris Johnson's going to require new homes have an EV charge point. Any
Wow.
companies that are doing that?
Mm-hmm.
Yes.
That makes a lot of sense. With more EV cars, just like, with the internet connections that never used to be built in the houses and now they're
Right.
built in. I mean, that makes perfect sense to me. There's
Do you drive an EV, Kathy? Or
I do
hybrid?
not. I do
Yeah,
not. No,
me
I have
too.
a really old Honda
Okay.
and
Yeah.
I have a RAV4 and it's
Okay.
also old.
Okay. All
So
right.
I don't know, Dale.
All right. Well, used car prices have gone up. Maybe it's time to liquidate those when you get some money for them while they're still running. Yeah, I burn gas too. So Kathy, what's the best way for people to, get in touch with you, learn how to become an investor rather than a trader? And it's a skill traders don't have. You have to. It's something you have to relearn if you're going to do it, and have a separate account for it so you don't confuse what you're doing in the S&P with what Kathy does. So here you go.
Yes. If we have, you can find me on Twitter. This is my Twitter handle, KGD_investor. If you go to our website, you can email us through the website or at authors@thelifecycletrade.com. And then also I'm on LinkedIn. So yeah, happy to help out if I can. And, we've got a lot of great.
Let me make a comment that like some Forex gal saying, and her Ferrari in the garage. First of all, I think it's very authentic of Kathy to say what she's driving. And also, I knew multimillionaires that had huge cotton fields and horses and everything that drove old cars. Okay. And the people that are talking about their Ferraris in their driveway that are in this industry, and then it shows them flying on a private jet, having champagne, and then getting into a limo, run away. So, and the car you drive doesn't reflect your success as a trader at all. Because I have a Gremlin. Okay.
Gotcha.
No, a Pinto. I have a Pinto. No, anyway.
Oh, okay.
All right. Anyway, I have a Grinto. So, Kathy, I wish you a happy Thanksgiving, and that all you have in your stocking, blossom into the spring for you. A little metaphor, and really appreciate you coming here and showing something that most people would not have the discipline or the paradigm to do. So, I commend you on your patience and being able to invest like this. I really do not know how to invest, and I think you're ahead of the game because traders, they come and they go. Investors have a chance to build, huge amounts of capital for later in life when they need it. So I recommend people learn how to do this.
Well, thanks so much, Dale. Happy Thanksgiving to you. Thank you always for having me on. I really enjoy it so much. You're so much fun to talk with, and happy Thanksgiving to everyone out there as well.
Thank you, Kathy, and follow Kathy on Twitter at KGD_investor, and she has newsletters on her website. And thank you, my trading warrior sister, for your giving spirit and coming here and showing things that have worked over time and new ideas every time you're here. Appreciate it.
Appreciate it. Thank you.
Okay, everyone, that's a wrap. Remember, don't just count your IPOs, count your blessings. I'll see everyone for Turnaround Tuesday. I have Kenny Polcari. If you watch financial television, Kenny's been on CNBC. He's gravitated more over to Fox Business. Who knows? Maybe it was, politics based upon which financial station broadcasts your views. Anyway, it'll be his first interview here on Face. So tune in tomorrow for Kenny Polcari. Adios, everyone.